2 months ago, I wrote in the Morgan report that I saw gold kind of range bound from that point. So 2 months ago till through the summer and perhaps to the end of the year. Range bound, I didn't give exact numbers, but somewhere like 3250 to 3500. And so far, I've been correct for 2 months. In the meantime, I said if you were overweighted gold or want to take partial profits or whatever, it'd be a good idea to look at platinum and silver because the ratio at that time, Stu, was somewhere around 100 to 1. And we've dropped down about 92 or so. So it is working in silver's favor, but we still have a long ways to go. I do think we'll see a ratio of maybe 70 to 1 by the end of the year, meaning that silver will outperform gold relatively from this point forward.
In recent months, gold prices have risen to new record highs, topping $3,500 for the first time before easing to $3,350. Silver prices have also been growing in tandem, peaking at above $37 per ounce but remaining well below its twin highs from 1980 and 2011. On a day-to-day basis, gold and silver prices are often highly correlated with a one-year rolling correlation. According to DavidMorgan of the Morgan Report, we've entered what he sees as the concluding stage of the gold and silver bull run. He points out that the gold-to-silver ratio is declining, a clear sign that silver is beginning to outpace gold. Morgan expects this ratio could narrow to 70 to 1 by year's end. During gold's period of outperformance over silver, the gold-silver price ratio, the number of troy ounces of silver it takes to buy a troy ounce of gold, crossed over 100 for the first time since 2020 before falling back towards 90 in June. During the period from 1997 to 2011, 1 ounce of gold typically bought anywhere from 25 to 83 ounces of silver, so its current trading level of around 90 times as expensive as silver is still far from what was once a historical norm. Morgan believes silver's significant surge may still be on the horizon. He explains that silver often lags behind other assets before making a sharp, rapid move upward, just as it did in 1979 and 1980. He suggests a similar scenario could unfold again. Mining production of both gold and silver peaked in the mid-2010s, fell in the late 2010s, and then stabilized. Secondary supply has been rising, but it tends to respond to price changes rather than drive them. Silver mining output has been around 800 million. Morgan notes that a crucial indicator of a strong bull market is now emerging. Junior mining companies are successfully securing more funding. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
2 months ago, I wrote in the Morgan report that I saw gold kind of range bound from that point. So 2 months ago till through the summer and perhaps to the end of the year. Range bound, I didn't give exact numbers, but somewhere like 3250 to 3500. And so far, I've been correct for 2 months. In the meantime, I said if you were overweighted gold or want to take partial profits or whatever, it'd be a good idea to look at platinum and silver because the ratio at that time, Stu, was somewhere around 100 to 1. And we've dropped down about 92 or so. So it is working in silver's favor, but we still have a long ways to go. I do think we'll see a ratio of maybe 70 to 1 by the end of the year, meaning that silver will outperform gold relatively from this point forward, but still somewhat disappointed from the aspect of being such a silver bull. But try to take a step back and remain objective. What we saw in the biggest bull market that I lived through, which was in the 70s till 1980, it's not unusual for silver to kind of lag, and then all of a sudden just get this huge burst and do this huge spike. And that's what we saw in the 1979 to 1980 peak. And so I think we could see something similar here, Steve. So certainly I haven't given up the call to go ahead and you may swap gold for platinum or silver or both. So far is doing, paying off. Platinum was, kind of trading water 2 months ago, and now it's really outperforming gold on a from beginning of the year till now basis. So I'm happy the metals are in. And to finish with what you said, and this is extremely important. I want confirmation. And what's the confirmation? The confirmation is that money's coming into the junior mining sector. Before this interview, I was on a call, and a gentleman put out an offering to raise 12 million. They raised 17. So that tells you when it's oversubscribed like that, interest is definitely coming back into this market. That's confirmation the bull market is alive and well. And we are in my studied view, the third phase or the final phase of the bull market. So let's go back to the beginning of this bull market. And this is when we had really a 20-year bear market in gold and silver. And then we finally hit that inflection point. Gold was at 252 an ounce, and silver was under 5. And we started a major move from roughly the year 2000, 2011. So we had an 11-year bull market in gold and silver, and you just couldn't go wrong. So in that early stage, there was a guy that was younger than me. Almost everyone is these days, but even in those days, he's younger. 26 years ago, and so 25, 6 years ago. So he kind of grabbed my coattails and he ran. But all he did was some really small cap junior, micro cap juniors that claimed to have assets in the ground when really they were exploring for assets in the ground. So we were comparing notes one day, and he told me that his portfolios were $7 million, and I'm like, "What? This guy's almost a teenager. Didn't really have that much capital to start with. I mean, this is incredible." But it shows you in a real strong bull market that begins, you don't have to use brain power. You just have to be in an extremely strong bull market. So he had all these juniors that on paper had gone up 10 times, 15 times, 20 times on paper. Well, then the market turned after a few years and he had all these paper profits. My portfolio wasn't even close to that. And yet, when the market turned and he had to sell, he was getting, he might have broken even. I mean, these stocks went down so quickly. So you have to know how the cycle works. So in a major cycle, at the very beginning, you can be in the juniors and do really well, but know how to sell them. They're a burning match. They're going to burn your finger if you hold them too long. Stick with the top tiers, which is what I teach for the long duration. Balance your portfolio. So I said all that to say this, Steve, because we're coming into the last leg, and the last leg it's the opposite. At the opposite end is all these juniors, some have merit and some don't, is the, let's say, late to the market, but good promoters will come in with these penny stocks at the top of the market and say, "Hey, we've got this exploration company in Nevada. It's the Silver State. We've got, whatever." And they'll have a great story to sell. And those stocks will take off, just like at the very beginning of the market. But now it's at the very end of the market. So that's what I'll be looking for. And I may do something with that class of stocks. I may not. I've got the URL Silver Speculator, kind of still working out in my head how we could do that. David Smith and I wrote about it in the Second Chance book, How to Profit from the Coming Tsunami in Gold and Silver. But you got to be careful because the late comers, when gold's going through 4,500 the ounce and silver's up into $70, wherever we're at, people will be looking and they'll be in the fear of missing out. They're really late to the party and they don't want to be. So they'll be looking for very cheap priced gold and silver mining companies. And that will get a rush, but it won't last long. So that's a heads up. I know these markets well. I'm not perfect, but I know how to play them. And in that case, you kind of take some of the money you might have made on a blue chip that would be in my top tier and blow the money, for that 10 bagger or whatever. But you don't want to bet the farm, especially at that phase of the market.
When it comes to gold equities, Morgan stresses that value is currently being overlooked. Many major gold companies are still priced as if gold is $2,000 an ounce, even though spot prices have moved significantly higher. This disconnect, he says, presents a significant opportunity for savvy investors and institutions, such as sovereign wealth funds and family offices. Although mining stocks have already delivered solid gains, several signs indicate that the bull market is still in its early stages. For most of the year, the GDX has seen net outflows totaling nearly $3 billion, with significant inflows only just beginning in the past few weeks. Similarly, GDXJ has experienced only a few isolated days of net inflows. Many high-quality mining companies have yet to join the rally, which highlights the broader market's hesitation to commit to the sector entirely. This disconnect, rising stock prices despite continued fund outflows, suggests that the rally has not yet been widely recognized or embraced. As the bull market matures and investor confidence builds, a wave of fresh capital could still flow into mining equities, fueling further upside. Let's get back to the interview.
Mining equities all we want, and certainly I'll come back to that. But the big picture is what you outlined. And that's why we're going to go to hard assets. And there's a couple of guys, and I heard it on a podcast. I didn't write their names down, but they were talking, and they're fund managers, about that shift. And they had a name for it. I'm just going to call it asset allocation. And they're saying it's taking place. Now, I was early on that, saying that the run to gold has begun. And I was saying it over and over on almost every other podcast because the banks are buying gold hand over fist, 2023, 2024, spilling into 2025, because the smartest money are pretty much the elite banking establishment. And they were buying gold. Why? Because you couldn't trust the dollar or the US word about something as important as money in the international markets because of what they did to Russia, and they froze $300 billion. So now everyone's saying, well, wait a minute, I don't trust the US's word and I don't trust the dollar. Now what am I going to do? Well, I'm going to go to something sovereign. I'm going to gold. So the run's begun from the smart money, but as far as the shift in asset allocations, just started. I agree with you wholeheartedly. Why? Because we're still seeing very high numbers in the top tier, let's say Magic 7 in the DJI and the S&P 500. I mean, these algorithms know how to move an index number to a high, even though the underlying foundation is deteriorating. If you pick the right 7 stocks and move them up with options and leverage, it makes the number look big. So people have a false belief that the economy is great because the S&P's number is so large. Bogus, not true. But as reality starts to shine through to everyone, you're going to see more and more people move into, and you left out oil, not that you deliberately did. I'm just bringing up oil, anything hard asset. It could be lumber, it could be cocoa, it could be anything. But it's the commodity sector overall, the top tier of all commodities are money metals. And you're starting to see that. Look at platinum, what it's done this year. No one talked about platinum for years and years. And yet, what's the most prestigious metal at one time was platinum. I mean, if you're going to go to the American Express, what was the highest card you could get? It's the platinum card. And now platinum's at 1/3 the price of gold. So there's a long ways to go in this market, Steve. I think you nailed it, and thanks for reviewing the big picture analysis because that's the reason, in my opinion, why you own gold, why you own silver. It's because everything else out there is really mispriced, and these two metals, especially silver, aren't priced correctly at this time. Yeah, the tide has turned, and there's other examples, but you're right. I think part of it has to do with that the real value plays are in the top tier cash rich unhedged gold companies because their metrics are showing, $1,800 gold, and now we're almost double that price. What do you think that's going to do to the bottom line? If a stock is selling, if your cost of goods, if you're looking at the widgets, the proverbial widgets in business school, and the widget's 2,000, and that's what your stock shows, and that actually price is 3,500. You got a lot of upside in that stock price, and that's basically the story on most major gold companies. The market has priced them as if we're getting 2,000 ounce gold, but we're not. We're getting 3,300 ounce, and so money that knows the algorithms, portfolio managers, family offices, sovereign wealth funds, you name it, are going to see that at some point. I think they've seen it, and I think you're starting to see the money flow, and that's very important because money uh, has a mind of its own almost. I mean, it always goes where it's treated best, and in an uncertain stock market, certainly an uncertain bond market, an uncertainty about the further devaluation of all currencies, especially the dollar, the US dollar, where do you go? Where you go where the best value is. Where's that? It's gold. Exactly. Well, what we've seen on our equity side, which we write about, of course, across the board, we do a lot more than silver companies. But speaking of silver companies, because they're very popular and silver is really undervalued. I mean, we've had 3 of our companies taken out. Silvercrest got bought out, and then we've got Mag right now, and one more. And so, it either shows we're pretty good stock pickers. And of course, some of my membership are saying, well, geez, David, this isn't right because, you're picking these stocks, but they haven't blossomed all the way. Well, I don't have control over the market. And, if Pan American sees an opportunity to buy MAG and they can get it, and the shareholders say, yeah, we want the deal, I don't have any control over that. It does show that we did some good, stock picking. And, there's a lot more opportunities going ahead, and especially with money coming into the junior sector, which is really the incubator for large discoveries. But the majors will do what I'm outlining here, where they've got a sure thing by buying a Silvercrest. They got a sure thing by buying Mag Silver, and so we're pretty happy with what we're seeing on the equity side. And I think it's just starting, really. I mean, you look at some pretty big brain power in the industry, like Tavi Costa, and what he writes something pretty pertinent almost every day on either LinkedIn or X. And he's showing time and time again how underpriced the mining equities are relative to the general market, relative to the metals themselves, as I just outlined. And so I'm really getting more and more confident that we've got everything lining up. It's going to be, in my view, a major move, and we're just getting started. So if you saw, a move in your favorite junior or whatever, wait for a slight pullback or whatever and jump on board. I wouldn't. I do it so much slow over time. I'm conservative. I'm older. It's like, hey, you don't have to dump everything in right now, but you really need to be paying attention. Maybe build that want list or whatever. And I'm going to take it one step further, Steve. Just allow me another moment. But I just did an update for our members last night, and I'm going to bring our main mining analyst in. I've got two, and I'm just going to go through what we call sensitivity analysis, because I'm getting a lot of emails from my membership saying which one of these stocks is going to do the best out of all the stocks, which we don't have that many. I hate long lists, and you don't know. But you do what's called sensitivity analysis, which is a theoretical, if gold moves X, this stock's going to move 3X, but this other stock's going to move 2X. That's sensitivity. In other words, this stock is more sensitive to the price movement in gold than this one is, or silver, or lithium, or rare earths, whatever the equity is getting out of the ground. And so I'm going to actually have Chris, who's our main guy, worked with me for years, helped me write the Silver Manifesto, to come on for our membership. And I can't go through every stock, even though we don't have a long list. We're very thorough. So I'm going to pick out maybe 3 or 4 out of the top tier, 2 or 3 out of the mid tier, and then look at the junior producers.
Since 1971, when the U.S. officially abandoned the gold standard, gold has delivered strong competitive returns, nearly matching global equities over the long term. Based on Bloomberg data, gold has posted annualized returns of 8.4%, compared to 9.2% for international stocks. More impressively, since 2000, gold has outperformed, delivering 10.1% annual returns versus just 5.9% for global equities. This performance underscores gold's enduring role not just as a hedge, but as a high-performing asset in its own right, particularly in times of uncertainty and monetary expansion. Silver, meanwhile, edged higher to around $35.95 during the Asian session on Wednesday, supported by a softer U.S. dollar. Market participants are closely watching for comments from Federal Reserve Chair Jerome Powell, whose testimony later today may offer further clues on the direction of interest rates. The prospect of easing monetary policy continues to support both gold and silver, keeping investor sentiment firmly in favor of precious metals. Few assets command enduring trust across economic cycles like gold and silver. Yet what's unfolding now seems more than a typical flight to safety. It's a potential revaluation of these metals' roles in the global financial system. With silver tightening its gap to gold and mining equities still underappreciated, the setup resembles the early innings of a much broader move. As attention gradually shifts from headline price action to structural fundamentals, the precious metals narrative may be just beginning to capture its next wave of capital. Will investors recognize the undercurrents of this evolving bull market in time, or will they look back only after the breakout becomes undeniable? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.